Hello, you're watching Proactive London. Joining me is Charlotte Morris, partner at Pantheon and co-lead manager of PIP. Charlotte, very good to meet you. PIP's had a busy year. What have been the main activities?
Yeah, it has indeed been a busy year. So first of all, we announced last year the programme of share buybacks, and that was executed through the year to the end of May. About £197 million of share buybacks were completed. You know, those sorts of transactions make a lot of sense to us when the discount is wide and we're able to invest in a portfolio that we know really well at a 35% discount. So they resulted in a 4.7% uplift in NAV. And having completed that initial £200 million of buybacks just after the financial year end, for us, the natural extension of that was the capital allocation policy. So we announced that effective from the 1st of June. And that set out really clearly our approach to allocating available cash going forward between ongoing share buybacks and also new investment opportunities. On top of that, there was also a lot of activity in terms of financing. So we completed a refinancing of our £500 million equivalent revolving credit facility in October last year. And through that, we removed Credit Suisse as a lender. And then in early 2024, we completed a private placement of $150 million of loan notes. That was at a blended coupon of less than the all-in interest of the RCF. And between those two actions, PIP now has a more diverse supply of liquidity from 10 different counterparties. So as you say, it's been a busy year, both in corporate strategy, leverage strategy. It doesn't stop there. I mean, we've got more to do going forward, particularly on that sort of narrowing the discount and bringing private equity to a wider set of investors.
How has the performance been in the reported 12-month period, Charlotte?
Yeah, it's a great question. So our strategy is to try and tilt the portfolio more towards direct investments. And we've seen progress towards that goal over the year with an increase in the direct investments. So that's co-investments and manager-led secondaries to about 54% of the portfolio. And at the portfolio level, we saw valuation gains that contributed 5% increase in our NAV over the year. I mean, that really is driven by the underlying fundamentals of the companies in the portfolio, which have just continued to deliver long-term growth. You know, over the 5-year period, we've seen revenue and EBITDA CAGRs of 17, 19%, really outperforming what's happened in the public markets. And that valuation increase was pretty consistent across the portfolio. So we saw increases across all types of investment, all stages. We've also been really pleased with the exit activity during the year. So those exposures that we have in high quality, resilient companies, that's really translated into attractive exit statistics. So, you know, despite the backdrop for realizations that has been challenging, we observed a 20% uplift at exit across more than 400 exits this year. And that uplift at 20% is a little bit lower than in prior years, but the multiple of cost achieved on those exits was really robust at 3.2 times multiple of cost. That's above the 10-year average, actually, which is more like 3.0. So we're really happy to see such strong exits in a year that has been fairly muted, actually, in terms of overall private equity activity. And when you think of the current average holding mark of the portfolio, that's about 1.6 times cost. We really believe that there's attractive embedded value in the portfolio, and we're looking forward to seeing that be realised over the coming years.
What's your outlook for the coming months?
Well, the portfolio continues to perform well, but as we all know, the environment for investment activity in private equity has been quite muted for the last couple of years, with the backdrop of a more challenging macro environment. So despite that context, the best private equity managers have continued to raise new capital. We're beginning to see some signs of improving conditions that we hope will underpin an increase in investment activity across the sector. We've already seen sort of inflation coming down, interest rates starting to stabilise, and a shift away from, how high can rates go towards when will cuts start and how quickly will rates come down. This year, something like half of the world's population is heading to the polls, and as the results of those elections start to deliver some certainty around the political landscape, we expect that to contribute to a more certain outlook that can unlock more deal activity. We obviously don't have a crystal ball, but it does feel like we're starting to see the early signs of the tide turning.
In a statement, the chair talks about step 3 of the 3-step corporate program. What will that involve?
Yes, so the key to step 3 is the desire of the chair and the board to broaden the investor base and really stimulate demand for PIP shares. Now, we've obviously been very active in terms of corporate activity during this year. The board is really committed to the democratization of private equity, and that means attracting new investors to the trust through transparency, education, raising the profile of the listed private equity sector more broadly. So as the chair explained in his statement, we've engaged a marketing agency and will work with them on campaigns targeted at retail investors in particular, but also institutional investors. We truly believe that PIP offers an attractive risk-adjusted return to investors by providing access to a globally diversified, low-risk portfolio with a long-term track record of generating attractive returns. So, we've seen NAV grow 13.5% CAGR over the last 10 years. The performance of the portfolio over the last 2 years, especially, which has been a challenging environment, has just demonstrated the resilience of the portfolio. As I said before, over the exits this year, the portfolio has realised 3.2 times multiple of cost, and that's with a loss ratio of only 2.3%. So we hope that through the step 3 efforts, we can demonstrate that private equity exposure has a place in the portfolio of any investor, whether that's retail or institutional.
Well, Charlotte, I hope you'll keep us posted on any progress. Thank you very much for the update today.
Thank you for having me.
Very welcome. Charlotte Morris, partner at Pantheon and co-lead manager of PIP.